So where can you put your money in March 2024 here in the UK to get the best possible interest rates on your savings? I'll take you through the best, the highest paying, the top of the table, and a few other options across all the different types of accounts, plus some other sort of nuggets of news and different accounts you might want to consider, even if they aren't right there at the very, very top. Before we do that though, it's always worth kind of giving you a kind of a broader kind of look at, I can tell you where you can get the best money right now, but how does this kind of fit in with the broader kind of context in terms of savings over the last month or 2 months? Well, surprisingly, a little bit of good news here, because whereas every time I've done these updates over the last, frankly, for the last 6 months, I would say, since sort of October, November of last year, every month rates have been getting lower and lower and lower across pretty much all the different account types. We've seen a smidgen, a tiny little bit of an uplift at the top of the tables. Now, this doesn't mean rates aren't still falling and many providers are pulling rates or reducing rates. It just means that every now and again, and this is largely due to competition, they want to attract us in with their custom, there have been, again, a few accounts, at the top going, actually, no, here's a little bit more than we were giving you a week ago, 2 weeks ago, or a month ago, which is good news if you're looking to save right now. They're still broadly, not always, but broadly at the top of the stable, still down on where they were at the top of the year, at the start of 2024, and obviously still way down in most categories on the best rates you could get, in the sort of autumn last year. But it's good news that this is kind of happening if you're going to move your money right now. So to give you an example here, an easy access savings account, they have moved up just a tiny little bit. The best one here with no restrictions at all. 5.12% right now at the time we're recording this, whereas a month ago the best you could get was 5.1%. This is down from where we were at the peak of the start of the year and late last year, where you could get 5.22, but it hasn't been such a sort of drastic change. We'll still be able to get 5.1, and we'll talk about those in detail in a minute. Limited access, again, we've seen a slight increase there. The previous table topper, that actually went at 5.15% a month ago, but there's another one that's come in at 5.16%. So again, not too much movement right now on easy access. But when we look a bit further down though, we look at fixes. This is where it's slightly more surprising actually, and you can see that the 9-month fixes, 12-month fixes, 3-year fixes, 5-year fixes, they're all offering more than they were a month ago, which is kind of counter to that kind of pattern that we've seen over the last sort of, say, 6 months or so. The biggest increase really there is the 12-month fix, up, again, not a huge amount here, but up 0.08 percentage points. So you can now get a 5.126% 1-year fix, whereas a month ago it was 5.17. In fact, it was down to 5.1% in between this. So it's this extra accounts have come along to boost it. But still well down on where we were at the start of the year, where that was 5.5%, and obviously we could be getting more than 6% back last September. So I will take you in detail through all of these as we go through this, but just give you a kind of broad idea that the kind of that fall that we've seen has stalled for a moment, and that is obviously going to be linked in quite closely to what's been going on with inflation and with the Bank of England. The most recent inflation rate, which was announced at the middle of February, and this is for January's figures because it's always a month after, because you need to get the whole month's figures to work it all out, actually stayed where it was. It stayed flat at 4%, which actually meant they thought it might go up a little bit. So staying at 4% is good news. But remember, the previous month it had gone up slightly when it was expected to fall. So we're kind of staying at 4%, and there is still the expectation, we imagine, that it's going to drop down for this summer and then back up again, but still gradually will be coming down a little bit. But that, combined with the fact that we are in a technical recession here in the UK, probably has meant that those predictions for when we see those base rate increases has stalled a little bit, delayed them a little bit. They might come a little bit later on than originally was anticipated, which means a lot of those cuts that were already kind of the banks have been factoring into those savings accounts in kind of December and January time. Well, they've kind of held. They haven't been pushing any more cuts through, and let's say a few of them have pushed it up a smidgen. Now, in terms of the next inflation rate and the next Bank of England Monetary Policy Committee meeting announcement, that's the 20th and then the 21st of March, respectively. So I'll obviously let you know all about those when we get that information and how that might affect things. But now, the good news is we can steal with pretty much any type of savings account. If you go to the top of the table, you can beat inflation, which is really, really, really important, really vital that we do this. Let's talk in detail here about the best easy access accounts. I would be saying here you want to be getting at least 5.1%. And this is relatively easily achievable. Though again, a few accounts have disappeared. We've had some new ones from the likes of Beehive Money, At 5%, we've got Moneybox, although technically it's a 4% account and you need to have a separate pension or ISA with them to top it up to 5%. But again, there's still a number of new accounts coming in and still a number of decent accounts that have been around for a while at 5.1% or above. But don't forget, you can also still beat this with some loyalty accounts, which potentially up to 7%. So easy access money right now, we haven't seen the cuts yet. They will be coming, but certainly I would be aiming for that 5.1%. Now, in terms of the best places to go for this, I would be looking in the first instance at for linked one, the highest rate you can get is still Santander's Edge Saver, paying 7%. Now, this does include a 2.5% bonus for the first 12 months. So after a year, it's not going to be as competitive. And also, you're capped at £4,000 every single month. Every total balance you can put in there, £4,000. And you have to have a Santander Edge current account to get this. And that comes with a fee every single month. Now, the fee shouldn't be too much of an issue because if you are using this account to pay your bills, you'll get cash back on your bills and that should wipe out that fee. If not, you need at least £2,000 in there for that fee to still equate with a top 5.2 sort of best buy rate elsewhere. So I still think if you've got under 4K or even more than 4K, but you want to put 4K in there and you can cover that fee, then that's still your best paying one out there. You can get 5.2% Ulster Bank, but you need to have an Ulster current account in order to get this one. And the Barclays Blue Rewards still pays 5.12% on up to £5,000. Again, I would rather go for a straight 5.12% paying account, but if you've got a Barclays current account, you can add this on, you jump through the hoops. That is not a bad option to go for. But if you don't want to go through all those different hoops, here are the best easy access accounts with no or very few restrictions. At the top is Kahoot, which is part of Santander. It's worth knowing it's part of Santander in case you have other money with Santander. That overall financial services compensation scheme protection is up to 85k, including Santander and Kahoot. This one is 5.2% rate, maximum of £3,000 you can put in there and only for a year. But again, that is a nice simple one. If you've got a small pot, you can open that one up. If you've got more money, I mentioned that Beehive Money has 5.12%. That also has a bonus for just a year. It will drop after that, but a good rate. Close Brothers also 5.12%, although a minimum of 10 grand needed in there. But again, showing you can easily get above 5.1. Also Monument Bank 5.11, Synergy 5.1%. Also that has a bonus for a year. These are just some of those top ones, the best paying ones. There are many below that between 5 and 5.1, which could also be better suited for you depending on your minimum balance you've got. And if you don't want to faff around with bonuses after a year. Remember, all these accounts, they can change. There are more. So over on becleverwithyourcash.com/savings, that's where the best buy tables are that myself and the team are updating twice a day, every single day. So you're always going to be able to find the best paying accounts out there for you. I said about limited access accounts have also improved. The top one here, 5.16%, so better than many of those accounts I've just mentioned. From Paragon, a maximum of 2 withdrawals a year, or 5.11% from Virgin Money, a maximum of 3 withdrawals a year on that one. When you're talking easy access as well, it's easy to forget about notice accounts, and it's worth just sort of bearing in mind that there are some decent options there that you could well be considering. These are variable, so the rates could change as with all those easy access ones. But if you know you don't need your money straight away and you have got that potential to kind of say, yeah, I can got some money easy access, and then if I need that, I know I can give notice to get the other money coming along, or there's something you're saving for that's not due to happen for a period of time. As long as you give that notice between sort of 2 and 6 months, you can get that cash. And again, these are the top paying ones. There are more options over on becleveryourcash.com. But we have got 2 months with Monument at 5.27%, 3 months with BLME at 5.35%, 4 months with Synergy at 5.2%, and 6 months with Market Harbour at 5.45%. All decent ones to be considering. Remember, becleverwithyourcash.com/savings for more options. Now, there is one other easy access-ish account that are worth talking about. And I did cover this on the YouTube channel late last week and an article on becleveryourcash.com. So I'm not going to go into massive details here. You can check those ones out, track those down, and I will link to them in the notes if you do want to find out more about this. But this is a 5.2% easy access account from Trading 212. Now, if you know about Trading 212, you'll know it is an investing app. And this is why it is slightly different to normal savings accounts, because the money you've got here, you are effectively investing it rather than saving it, which means it's not held in cash. That means it is not protected by the Financial Services Compensation Scheme. It's also very, very low risk, those investments. Again, talk about this more in that separate video and article. But there is an element of risk there, a small element of risk that you could lose some of the money to put in there. Now, I've normally avoided including this, when you guys have asked about it, I said, look, there's no point doing it because the rate previously was only 5% and you can easily beat it. Now it's a 5.2. It is much more marginal because obviously that is at the top. Those accounts I've just told you about, yes, it can be beaten or it can be matched, but they have restrictions. If you want no restrictions, this is kind of the highest paying. But I would say there's not enough of a difference between this and those next ones down, which don't have those tiny elements, those small elements of risk. So personally, I would be looking at using one of those accounts I've just mentioned instead of trading 212 for savings, but it's worth knowing about and worth watching or reading more about it in the other content that I have produced. Okay, let's look at fixed savings accounts now. As I mentioned at the top, a little bit of movement in them, but they're still roughly where they were a month ago. Some of the providers obviously have changed at the top. There's been sort of to and fro in there. If you're looking for short-term fixes, 6 months, Beehive Money, 5.17%. If you're looking at a 9-month fix, then Emirates, NDB, via Hargreaves Lansdown, 5.15%. 12 months, Smart Save, 5.26%. 18 months, Charter Savings Bank via Hargreaves Lansdown, 4.98%. 2 years, iFast, 5.1%. 3 years, Smart Save, 4.64%. 4 years, IS Bank via Raisin, 4.5%. 5-year fix, Shawbrook Bank, 4.53%. Again, there are other options which you've listed over on the website for different ones, but they're the top of the table right now. If you are looking to fix your money away, worth reminding you again, if you are going to fix for longer than a year, check how the interest is paid. If it's paid as you go along, the interest will count. When I say paid, is it accessible to you? Can you actually access it and use it as you go along? It will count for the financial year you receive it. If it is paid all at the end or can only be accessed all at the end, it will count for the financial year when that happens. So 2-year fix, you get it all in 2 years. All that interest counts towards your tax-free allowances in 2 years' time. So it's important you do those calculations if you have larger amounts of money, because these rates, although they're less than they were, they're still healthy, they're still pretty decent, and you could end up paying some tax on some of the interest that you earn. Again, loads more content on the YouTube channel, on the website, which take you through tax on savings and exactly how that works. Very quickly on premium bonds, it's worth just reminding you that as of this month, the start of March, the prize rate dropped to 4.4%. So still high in terms of the history of premium bonds, but it's still lower than it was before that when it was 4.65%, and still lower than what you're going to be able to get in other kind of savings accounts. We haven't seen easy access rates fall significantly yet, where I think it's potentially worth for most people switching out for, keep sticking with premium bonds. You're still better having your money elsewhere, unless you are someone who needs that tax-free status you get from the wins. But broadly speaking, premium bonds, that rate drop means they're less appealing, even less appealing than they were before. Let's talk about regular savers now. I've got some news to share with you here. There's a new regular saver from Cooperative Bank. This one pays 7%. You can add up to £250 every single month. The rate is variable. Now, this is only for people who have a Co-op Bank current account. So if you don't have one, it's probably not worth opening a Co-op current account just to get this regular saver. And the reason for that is there are other best buys, which I'll take you through in a moment, which either do the same thing or are slightly better. But if you do have a Co-op Bank account, it's worth having a look at this and seeing if this is an option for you in terms of trying to get, 7% is a really, really good rate. It is also the top paying or shared top of the table when it comes to regular savers, because we have seen a cut from the previous best buy. That was nationwide. It was offering 8% on its Flex Direct account. It has dropped down to 6.5% now for new customers. If you're an existing customer, there is no change. You'll keep that rate as long as you applied when the rate was 8%. If you applied, this was the middle of February this happened, when it dropped down to 6.5, then obviously you'll get 6.5%. Now, this is worth reiterating what I told about regular savers last month, because I said in this update 4 weeks ago that I wouldn't be surprised if we start seeing the rates drop on regular saver, those high rates reduce. We've already seen that now with First Direct. The others are still where they are, and obviously we've got this new one from Cooperative Bank, but I still think if you are able to save every single month, and do check the kind of terms with all these regular savers, some of them do restrict when you can access the cash, but if you are able to get these accounts and save into them, I would do it now while they're high, because I really can't imagine we're going to see anything new coming along which pays more. If anything, we'll see these rates start to drop down. And I'll take you through the best buys right now to help you kind of get a pick of which ones you should go for. So I said there were others paying 7%. First Direct is my pick here. You do need a current account for that, but it is a fixed rate for 12 months. So that rate is not, there's no chance of that dropping while you have it. And you can pay in £300 every single month, which is more than you can with Cooperative Bank. There is also one from Gatehouse paying the same amount, and you do not need any account for this. So that's kind of, you can just open it up. You don't need to be an existing customer and get 7% here. Also a max of £300, but that one is variable. So I'd go First Direct if you have a current account with them already. If not Gatehouse, then Co-op. After this, Nationwide is still up there in the table. 6.5% is still a good rate if you have a Nationwide account. Same with Club Lloyd, 6.25% is still really decent. Now, if you don't fancy the Gatehouse, or you want more regular savers and you don't want to open up loads of different current accounts, then Halifax still pays 5.5% without having to have any other accounts with them. So it's one to consider. And there is still a existing customer loyalty one from Skipton Building Society paying 7%, but you need to already have had something with them before 11th of January of this year. Finally, let's talk about ISAs. Now, we are in what's called ISA season, which basically means we've got about roughly a month until the end of the financial year. And this is when you'll see loads of people trying to push ISAs as a great way for you to save. And they might be. They could be. So what I will be doing is a separate ISA update in a couple of weeks, because that's when people may be a bit more active. And I think we'll see a lot more competition. I think we might see some rates starting to really sort of boost up as the different banks and building societies try and get your ISA money for the end of this year. And again, from April the 6th onwards for the start of the new year. So I might do one at the end of the year and another update at the start of the new financial year. But there is some quick news I will give you here as well. First of all, it is with Chip. Last month I told you that they had just introduced a new cash ISA. They have just increased the rate of it. It's now paying 5.1%, which puts it at the top of the table when it comes to easy access. It's a flexible ISA, which means you can take money in and out of it without it impacting your annual allowance. But at the moment, it doesn't allow transfers in, although they've said that is something they're going to change. The other one worth talking to you about here are lifetime ISAs. There was used to be a provider called Nude, which is like a weird name to go for, isn't it, when you are thinking of a financial institution, because you start typing it in to Google to find it, then it's going to be much, much harder to find lifetime ISAs. But anyway, Nude offered a lifetime ISA. The rates were always pretty good, but they had a £2 fee attached to it, which kind of meant they never really hit the top of the table because other providers were better without a fee. Well, they got acquired by, I think it's a mortgage broker called Tembo, and they now called Tembo. So Nude has disappeared. It's Tembo. And Tembo, one of the first things they did was to get rid of that fee. So there is no fee now for using it as a new or existing customer. Plus, they put the rate up to 4.3%, which was up right at the top of the table. In response to that, the previous top of the table, which was Moneybox, increased their rate as well to 4.4%. Now, that is technically the highest one, but that does have a drop to 3.5% after 1 year. So from that point of view, Tembo is probably your better option for lifetime ISAs, but they're the kind of the big ones to share with you. I'll take you through the kind of the other top of the tables right now. Limited access. Not sure why you would go to this if you can get one with Chip paying more, but Moneybox pays 5.09%, a maximum of 3 withdrawals. If you have a Virgin Money current account, you can get a 1-year fix at 5.25%. If you don't have one, it drops down to about 5.03 is the next one. So that is a very, very good 1-year fix. And it might be worth thinking about getting that now or nowabouts if you are able to, in terms of taking advantage of the current ISA allowance, or if you give it a bit longer, you might be able to get money in next year. But I'll cover that more in the next update. UBL 2-year fix 4.7, Aldermore 3 years at 4.5, and then UBL again for 4 and 5 year fixes at 4.05 and 4.16 respectively. Now remember, more details about these accounts that I've gone through and other options and any changes that are going to happen, because they will happen, over on becleverwithyourcash.com/savings. That is it for today. Thank you so much for watching this video. My name's Andy Webb. This is Be Clever With Your Cash. Check out these videos for more ways to get the most from your savings.